morning, students.
Good morning.
The last lecture we had completed up to question number 8. Let's continue from there. Cori company produces 3 products X, Y, and Z. Capacity of Cori's plant is restricted by process alpha. So there is a restriction, there is a limitation. Process alpha is expected to be operational for 8 hours a day and can produce 1,200 units of X per hour, 1,500 units of Y per hour, and 600 units of Z per hour. So restriction is there on the processes. Operational for 8 hours per day. 1,200 units of X can be produced per hour and 1,500 units of Y per hour. 600 units of Z per hour. Selling price and material costs are as follows. They are given you the selling price, material cost, and throughput. That means they have given you the contribution also. You can check over here. 150 minus 70 is equal to 80. 120 minus 40 is equal to 80. 300 minus 100 is equal to $200. So everything is given in dollars. Total factory cost is $720,000 per day. Required. Calculate the profit per day. If daily output achieved is 6,000 units of X, 4,500 units of Y, and 1,200 units of Z. Okay, so that is your actual output. So in that case, what is your profit per day? Second, calculate the TA ratio, that is throughput accounting ratio of each product X, Y, and Z. Third, in the absence of demand restrictions for the 3 products, advise the company's management on the optimal production plan. So let us calculate the profit per day for each of the 3. We'll start with that first. Profit per day for X we are having contribution 80 into 6,000 units, that is 4,80,000. For Y we are having contribution of 80 into 4,500 units. And for Z we are having 200 into 1,200. That is 2,40,000. Total contribution seven, 9, 10 lakh, 10,80,000. minus a fixed cost. $7,20,000. Profit per day. $3,60,000. So that is the first calculation. Second, they have asked us to calculate the TA ratio, that is the throughput accounting ratio for each of the products. So for that, we'll require the return per hour, or returns per unit. Contribution not per unit but per hour. Okay. So contribution per hour, and I will be requiring cost per hour. Now, how to calculate the contribution per hour? What I will do is, contribution per unit is given to me as $80 for X. I will multiply that by how many units of X can be produced in 1 hour, 1200 units. Okay, so we have marked that 1200 units. So 1200 units of X can be produced. So 80 into 12. For Y it is 80 into 1500, and for Z it is 200 into 600 per hour. We require per hour contribution. We don't require per unit. Okay, so contribution or throughput per hour divided by bottleneck activity hours. So I will require that. So I will get that first. That is return per factory hour. Cost per factory hour. They have given to me the cost. What is the cost? The total factory cost is given to me as $7,20,000 per day. So I will divide that 7,20,000 by per day. It is 7,20,000. In 1 day we are having 8 hours. So again per hour I require. So 7,20,000 divided by 8. Okay. So let us do that. Throughput or returns per factory hour. For product X, it is 80 into 1200. That is 96,000. For product Y, it is 80 into 1500, because you can produce 1500 per hour. So that will come to 1,20,000. And for product Z, it is 200 into 600. That is 1,20,000 again. Okay. Now, what we have to know is, after this, I will calculate the cost per hour, cost per factory hour. Total cost 7,20,000 for the day. Each day we are working for 8 hours. So cost per hour, we'll calculate. I'll do it at the side over here. Cost per factory hour. Cost per factory hour is equal to 7,20,000 divided by 8 hours. per day. So that comes to $90,000. So how to calculate the throughput accounting ratio? Throughput per factory hour divided by cost per factory hour. So 96,000 divided by 90,000, 1,20,000 divided by 90,000, 1,20,000 divided by 90,000. Okay. So that is how we calculate the TA ratio. So let us do that. TA ratio is equal to throughput contribution per hour, throughput contribution per hour per factory hour divided by operation cost per factory hour. So for product X, we have calculated throughput contribution per factory hour as 96,000. So 96,000 divided by 90,000. So we'll get that as 1.07. For product Y, it is 1,20,000 divided by 90,000. So that will be 1.33. Product Z also same. 120 by 90. So 1.33. Okay. So now this is the calculation of throughput accounting ratio. Let us see what is the third part of the question. Third part of the question is asking us, in the absence of demand restrictions for the three products, that means assuming that whatever we produce we can sell. No demand restrictions means that demand is not restricted. So we can sell whatever quantity we manufacture, we can sell the entire quantity. There is a demand for it. Advise the company's management on the optimal production mix. Optimal production plan, not mix, but optimal production plan. Optimal production plan means that you want to maximize your production. But if you have to maximize your production, there is a restriction, there is a limitation, there is a constraint in your production activity. So first of all, that constraint has to be removed, that limitation has to be removed. Now, how to remove that limitation? That alpha process is there now. Alpha process is there, which is creating that restriction. So we have to remove the restriction caused by the limited capacity or the limited process of alpha. Now, suppose we can't remove that restriction. That means we cannot do anything with that process alpha. So to get optimum production, what I have to do? You remember I told you three identifications. How do you identify a particular constraint or a bottleneck activity? What did I say? The stock of WIP will accumulate over there. So now if your stock of WIP is going to accumulate at a particular point, what do you do to solve that issue? You work overtime. Second point I told you. Machine is utilized more than other machine. Any particular point, if a machine is working more than other machines, that is a constraint. So you will work that machine more, but for that means you have to work overtime. So whereas other machines are working for 3 times, you may have to work 4 times. So overtime. So overtime working may improve the production output, or product specification changes can be brought about. Okay, so that is one thing. That is your one way of optimizing the production plan. Second is, if you see the three ratios that we have calculated, throughput ratios, you find that product Y and product Z are giving you more indicators of profitability. It is 1.33, whereas for product X it is 1.07. So if I'm talking about profitability, which is the most profitable product? The most profitable product is product Y and product Z. Correct. So product Y and Z we have to concentrate more upon. How do we know? The throughput accounting ratio shows that the profitability will be higher in the case of Y and in the case of Z. Okay. So let us write down answer to the third part, C part. Write down. In the absence of demand restrictions, in the absence of demand restrictions, the company can optimize its production plan, as follows. Next line, right? An attempt can be made to remove the restriction on output cost, to remove the restriction on output caused by CAUSED, caused by the limited process alpha, caused by the limited process alpha capacity, limited process alpha capacity. Full stop. Extra production can be obtained. Extra production can be obtained by overtime working, comma, process improvements, or product specification changes. Product specification changes. Full stop. Production of Y and Z. Production of Y and Z should be concentrated more upon. Since their TA ratios are comparatively higher. Their TA ratios are comparatively higher. Okay, so that completes all the questions over here. Now let us come to the case studies. As I told you, case study questions are, see, there are some purely theoretical case studies. Then there are certain case studies which are theoretical and numerical, practical, theoretical plus practical. Those types of case studies. Third type of case studies, purely practical. That means it is like a problem only. It is like a numerical problem. But it is going to give you a big story. And from that story, you have to remove the data and you have to see how to calculate and how to arrive at a particular decision. Okay. So, like that, we are having different types of case studies also. So, in chapter 1, we have seen purely theoretical case studies, where a particular story was given to you. You are supposed to identify the activities, primary activities and secondary activities, support activities. So that is purely theoretical case study. Nothing is there. Now you are going to have case study involving numerical figures. So it is like a problem only. It is like a practical problem only, but it will be lengthy calculations and it will be carrying more marks. So it will be like a 20 marks case study. Okay. So let us start with the first one. Commerce Limited makes and sells a single product, the unit specifications of which are as follows. Direct material, you are having X. Direct material is X, which is required 8 square meter at the rate of 40 rupees per square meter. Machine time 0.6 running hours. Now this is per unit. How do I know it is per unit? It is given unit specifications. So instead of giving you the word per unit, they have given unit specifications. It's understood. Okay. Machine cost per gross hour is 400 rupees per hour. Per hour per unit. Selling price is 1000 rupees per unit. All these are per unit figures. Given that machine time 0.6 running hours, it is per unit. Now, Commerce Limited requires to fulfill orders for 5,000 units per period. So, required output is 5,000 units. There are no stocks of the product at the beginning or end of the period under review. The entire production is sold. The stock level of material X remains unchanged throughout the period. Now, what is the meaning of this? Stock level of material X remains unchanged throughout the period. Now, see, for materials, I know a formula. What is the formula? Raw material consumed is equal to opening stock plus purchases minus closing stock. We have done this in Interc. Now they are saying that the stock of raw materials remains unchanged throughout the period. That means opening stock is equal to closing stock. Opening stock is equal to closing stock. So what does it mean? It means that raw material consumed is equal to raw material purchased. Okay. So certain things are not given to you directly, but as you are now in CA final, you know to draw the conclusions as to what a sentence means and how it is to be interpreted. Okay. Commerce Limited is planning to implement a quality management program. QMP. The following additional information regarding the cost and the revenue are given as of now and after implementation of QMP. So they have given you before implementation of QMP and after implementation of QMP, what has happened. Okay, let us see each one of them. 5% of incoming material from the suppliers are scrapped due to poor receipt and storage organization. So before you are implementing the quality management program, you are having 5% of the raw material scrapped, waste. After implementation of the QMP, it has reduced to 3%. Second, 4% of material X input to the machine process is wasted due to processing problems. 4% of the raw material introduced in the process, not purchased. The first one was raw material purchased. The second one is raw material introduced into the process. Out of that, 4% is lost. 4% is wasted. After implementation, that wastage has come down to 2.5%. Third, inspection and storage of material X cost 1 rupee per square meter purchased. For this, no change in the per unit rate. Fourth, inspection during the production cycle, calibration checks on the inspection equipment, vendor rating, and other checks, other inspection costs are 2,50,000 for the entire period. What they are saying, reduction of 40% of the existing cost. So 2,50,000 is going to reduce by 40%. Next one, production quantity is increased to allow for the downgrading of 12.5% of the production units at the final inspection stage. Downgrading, that means they are found to be of inferior quality. How much? 12.5%. But these downgraded units, these inferior units, are sold as seconds. Sometimes you find second sale is there in the market. The second sale means defective items also. So downgraded units are sold as seconds at a discount of 30% of the standard selling price. 30% of the standard selling price. That means if your selling price originally for good quality products is 1,000, this you are selling at 700. How much is downgraded? 12.5%. Now, this 12.5% after the implementation of the program reduces to 7.5%. Next one, production quantity is increased to allow for return from customers. These are replaced free of charge due to the specification failure and account for 5% of the units actually delivered to the customer. Which means, what is the meaning of this? Production quantity is increased to allow for return from customers. So if my demand is 100 units, I will not produce exactly 100 units. Because if my demand is 100 units and I sell 100 units, 5 units are returned back. 5 units are returned back. So there is a sales return from the customers. So what is going to happen? I will produce 105 units. Demand is 100. I will produce 105 units because I know that out of the 100 units manufactured, 5 are going to be returned. So I have to replace them. So I manufacture 105 units. I sell 100 units. 5 units are returned. So it comes down to 95. Those extra 5 units then I replace to the customers. Okay. So that is how the production takes place. So they are saying that production is taking into consideration the returns from the customers. So if the demand is 100, I will not produce exactly 100. I will produce 105. So that even after returning and replacing the products, I am comfortable. I am having necessary production with me. Now this 5% return after the implementation of the program is going to come down to 2.5%. Okay, next one. Product liability and other claims by the customers is estimated at 3% of sales revenue from the standard product sale. This is reduced to 1%. Product liability. Now, complaints from customers where we are supposed to make a payment, maybe a compensation or something like that. So that was estimated at 3% of sales revenue. After the implementation, it will come down to 1%. Next, machine idle time is 20% of gross machine hours before the implementation. That is 80% of gross hours. Now that is going to reduce to, that 20% is going to reduce to, from 20% it will come down to 12.5%. Okay, so machine idle time will be reduced from 20% to 12.5%. Next one, sundry cost of administration, selling and distribution, total 6 lakhs. That is going to reduce by 10% of the existing amount. So it will come down to 5,40,000. 6 lakhs minus 60,000, 5,40,000. Prevention program costs 2 lakhs. This is to increase to 6 lakhs. The total QMP, that is the quality management program, will have a reduction in machine runtime required per unit of the product to 0.5 hours. Initially, it was 0.6 hours. Correct? Initially, it was 0.6 hours. Now that is going to come down to 0.5 hours. What you are required to do? Prepare summaries showing the calculation of number one, total production units pre-inspection. Pre-inspection. That means before inspection. And second is you are going to do purchase of raw material X in square meters. How much you are going to purchase. And third, you are going to show calculation of gross machine hours. Gross machine hours. Okay, that is the first part. So three calculations you have to do. Total, how many units you are producing? Second, total, how many units you are purchasing of the raw material? Third, total, how many machine hours are there? Gross machine hours. Second part of the question. In each case, the figures required are required for the situation both before and after the implementation, so that orders for 5,000 product units can be fulfilled. So the three calculations that you are supposed to show, total production, total purchase, and total machine hours, that you have to show before implementation as well as after implementation. And then the last part says, prepare profit and loss account for Thomas Limited for the period showing the profit earned both before and after the implementation. Need not prepare a profit and loss account. You can prepare a statement, a revenue statement. Okay, showing the profit which is earned before the implementation and after the implementation. Now I will give you enough time to calculate each one of them. So I want you to start with calculation of total production units pre-inspection. How many units are you going to produce? Gross units, taking into consideration the wastages which are going to be there, the downgrading of units which are going to be there. How many units you are going to produce? Calculate and tell. Before implementation and after implementation. All the data is before you. So use the data and calculate before implementation and after implementation of the program. How many units are you going to produce? So in all this data given, you have to identify what is going to affect my production. So how you are going to start your thinking process. See, for case study, you require a thought process. How you are going to attack the case study? What is the procedure? Where to start from? So you are calculating number of units produced. So identify which of these items are affecting your production, and then take only those factors for your calculation. That is the most important thing. Identify items affecting your production. So do it now. Calculate total production units pre-inspection, before implementation, and after implementation. Yes, Swastik, tell me the answer. For one calculation, if you take 15 minutes, 3 hours will complete only 2 case studies. Tell me what you have calculated.
First, I have calculated the total cost for this 5,000 units.
No, we don't require the cost. We require only the number of units.
Okay.
Number of units.
Yeah, first is 40,000 units.
40,000. No, we are producing only 5,000 units. Output production is 5,000 units.
Okay.
Work it out. Yes, Akhilesh, what figures have you got? Satvika?
Of it's before implementation I got is 6,324
Okay.
and after is 5,774.
Okay, before implementation, what calculations you have done? Can you tell me?
Units required to fulfill orders is 5,000
Correct.
for both of that. Then incoming materials from the supplier scrap due to poor receipt and storage organization will be 250 and 150. Then wasted due to processing problem, it is 200 and 125.
No, before that, what did you tell me? 5%?
4% and it has been reduced to 2.5%.
Okay, now 4%. If you have taken, it is not affecting my production, Satvika, because 4% is of material, raw material X input into the machine, which is wasted. It is not the production which is wasted. It is the raw material which is wasted. So it has got nothing to do with the production part. Okay, what is the next thing that you have told me?
Quality downgrading, it is 625 and 375.
Okay, now quality downgrading, you have calculated 12.5% of what figure?
5,000.
Read again.
I had to consider 5,000 plus 250.
Okay. Now see, pay attention now. Everybody stop writing. Everybody stop writing. Why I have given you this for calculation? Because see, you have to learn to identify certain things which are required in the question, which are required for a part of the question, solving a part of the question. Now see, we are solving what? We are solving the total production units that I'm going to manufacture, total units that I'm going to manufacture, taking into consideration that customers are going to return some goods. I told you this. If my demand is 100 units, I know that 5 units are going to be returned. So I will produce 105. Okay. So like that, taking into consideration, I'm looking at only the output. I'm not looking at raw material. I'm looking at output, production. What is affecting my production? Okay. So as we start with, what is the amount that is to be actually delivered to customers? It's 5,000 units. But as I told you, I will be producing. Which items I'm going to take now? See here. I'm going to produce not only 5,000 units. I told you that I have to account for this 5% units which are returned by the customers, because I have to allow for return by the customers. 5% is return. So how much will I produce? Will I produce 5,000 units? No. I'll produce 5,000 plus something. Plus something. So what is that plus something? That plus something is 5%. So actually I will be producing 5,000 plus 5% of 5,000. That is 250. So my actual production will be 5,250 units before implementation. After implementation, it is going to reduce to 2.5%. But 5% reduce to 2.5%. 2.5% of 5,000. 125. So before implementation of QMP, I used to produce 5,250 units, because I know that 250 units are going to be returned by customers and I have to replace those 250 units. Correct? After the implementation of the program, it has come down to 2.5%. So I will be producing 5,125 units, where 125 units will be sold and returned and replaced. That much is clear. Okay. Now, don't write, just pay attention. Next thing that they are saying is downgradation. So I know now, I'll just write it somewhere here. Before implementation and after implementation, I have to sell 5,000 units in both the cases. But here I will be producing 5,250 units. And here I will be producing 5,125 units. To take into consideration the returns that is going to come back from sales. Now let us look at the downgradation part. Wordings are very important. How you interpret those wordings will change your calculations. Production quantity is increased to allow for the downgrading of 12.5% of the production units at the final inspection stage. इसका मतलब क्या हुआ? What is the meaning of this? Production quantity is to be increased. See, quantity sold has been increased. Here what has happened? Quantity sold has been increased by 250 units and 125. Now they are saying production quantity is increased to allow for the downgrading of 12.5% of the production units. That means I know that 12.5% of the goods which are produced are going to be defective. So I have to produce that much more. I have to produce that much more to cover up that 12.5%. You follow? So 12.5% of the production units. Okay. So what is my production units? I don't know. This is my production units. How many units I'm going to produce? I don't know. 12.5% of this. 12.5% of this. That means this is 100. This is 100. So 12.5% of this 100 will come here. This is my production. 100 units of my production. 12.5% will come here. So how much is this then? This is 87.5%. Okay, this part. This is 87.5%. Have you followed? So this particular part that I'm having, it is 87.5%. So 5,250 is 87.5%. 12.5% of total production units at the final inspection stage. These words are important. At what stage? At final inspection. What am I going to produce? What am I going to inspect? Am I going to inspect 5,250? No. I'm going to inspect the last production units that I'm going to manufacture. And on inspecting these units, I find that 12.5% is defective. So balance is available for sale. Is it clear? Have you understood? Okay. So this is how we have to work out. So wordings are very important. Production quantity is increased to allow for returns from customers. This is sale, relating to sale. How many units are sold? 5,000. How many units are produced? 5,000 plus something. Because I have to allow for the return of the customers. So 5,250 units are to be produced for sale. Produced for sale. Achha, how many have actually produced? Because this 5,250 is after the downgrading of elements has been removed. After the downgrading has been removed. How much is downgrading? 12.5%. So how much is this? 87.5%. Okay. So it is 12.5% of 87.5% into 5250. Followed. Okay. So let me show you the calculations. You have to be very careful in reading and interpreting the statements. Case study question 1. Total production units pre-inspection. Okay. I'll stop writing. Pay attention. I'll first show all calculations. Then you can copy it down. Understand the calculations first. Before implementation and after implementation. Just look at the calculations. Don't do anything. I'll give you time to write. Okay. Before implementation, after implementation. Total sales requirement. Total sales requirement. That means how many units are required to be sold? 5,000 units. Before also and after also. Now, add to that specification loss. I'll call it a specification loss because specification is not met. Customers are returning the goods. So specification loss. Okay. 5% of 5,000. I'll show the working here. 5% of 5,000. And after that, it is going to be 2.5% of 5,000. Okay. So 5% of 5,000 comes to 250. 2.5 comes to 125. So how many units are produced for sale? 5,250 before, 5,125 after. Okay. Now this is after downgrading of materials. After downgrading of the finished goods. How much is downgraded? 12.5% of total production. Is this total production? No. After downgrading, it is 5250. So I'll write here plus downgrading of units. Plus downgrading of units. Okay. Now, see here, I'm going to here write this. This is my total production. Pre-inspection production. Pre-inspection production. So now my pre-inspection production, if it is 100, my downgrading is going to be 12.5. So 100 minus 12.5 is 87.5. Correct? So how do I show this working? 12.5 divided by 87.5 into 5250. Okay, this will come to 750 units. Then calculate and check. It will come to 750 units. 5,250 plus 750 will give you 6,000 units. We'll do the back calculation also. Now, for this, what is going to happen? That 12.5% is going to reduce to how much? It is going to reduce to 7.5%. So that means this is 7.5%. Downgrading is 7.5. So 100 minus 7.5, 92.5%. This is 92.5%. So now I calculate. How do I calculate? 7.5 divided by 92.5 into 5125. I think that will come to something like 416. I take the total 5,541. Okay. Now let us go back in the story. So stories like this, that I had manufactured 6,000 units before implementation. Before implementation, I used to manufacture 6,000 units. Out of the 6,000 units, 12.5 used to be downgraded. We can calculate 6,000 into 12.5%. 6,000 into 12.5% will give you 750 units. So out of 6,000 units produced, I used to downgrade 750 units and have 5,250 units available for sale. Out of which I used to sell 5,000 units, 250 used to be returned back, and I used to replace it with the additional 250 units produced. Clear? After implementation, I produced 5,541 units total, out of which 7.5% of 5,541 is downgraded, which comes to 416 units. How much is available for sale? 5,125 is available for sale. So you can say that this is available for sale. Okay, this is available for sale. Then actually required is 5,000. 5,000 is sold, 125 return. Again, I replace that 125. Right? So have you understood this calculation now? Okay, take down this. This is clear. Shall we proceed? So the first part was calculation of total production units that we have done. Now the total raw materials purchase. See, there is another way of looking at it. If you are finding this, a little bit difficult to understand, you can work the other way around. Work backwards. How to work backwards? Actual production, okay, minus downgrading will give you available for sale, okay, available for sale, minus the returns will give you sold. You can do it this way and then rearrange it. Sold is 5,000. Returns is 5% of 5,000. So this is 95%. Sorry, this is 105%. Okay. Then after that, actual production and drawing. So this downgrading is 12.5% of actual production. So that way you can work out. Okay. Now, same thing for a material purchase. My total purchases I have made, and after making total purchases, some units are scrapped. Some units are scrapped. Okay. This will go into my input for production. Now, out of this input for production, there is some processing loss. There is some processing loss. And the actual materials required is over here. That is material consumed. So now when I'm going backwards, what I will do? How do I write this now? In the reverse order. I will write first materials required plus processing loss will give me the input plus scrap will give me the purchases. Format you have understood. Okay, so we are going in this order. So if you are not understanding this, you can first write it in the normal way, that is total purchases. Out of total purchase, I scrap something. The balance was supposed to go for input for production. Out of that, some processing losses taken place. So actual material consumed is this much. Actual material consumed is how much? Now I'm going to find out that. Before implementation, how much was the production? 6,000 units. Output was 6,000. I've just calculated that 6,000. This is the output now. Now for the output per unit of output, how much raw materials are required before production? 8 units. Right? So 6,000 into 8 is the actual material required. Then I will calculate process loss. I'll calculate the scrap and so on and so forth. Okay. So I suppose you have understood the calculations here. That is more important. Okay. So let us do one thing. Right here. Purchase of materials. Purchase of materials. Bracket X, material X. Before implementation, after implementation. Material consumed or material required, you can write it. Material required or material consumed. Production is 6,000 units into 8 per unit. So 48,000 units of material are required. 48,000 of units of material are required. After implementation, how much am I producing? 5,541. 5,541. So 5,541 into 8. 5,541 into 8. 44,328. 44,328 plus processing loss. Processing loss. So see, processing loss, how to calculate? Processing loss, you are told 4% of the input is 48,000 input. No, this is the input. This is the input. Correct now? So 4% of this is loss. That means when this is 100, this is 4. So how much is this? This is 96. Correct now? This or no? Hundred minus 4, 96. So calculate now. 4 by 96 into 48,000. 4 by 96 into 48,000. 2s are 2 into 24, 40, 2,000. 2,000. Correct? Here it is going to be 2.5%. So if this is 100, this is 2.5. So this will be 97.5. So in that case, 2.5 divided by 97.5 into 44,328. So that will be 1,137. 1,137. So what is the input then? 50,000 here, 48 plus 2. After implementation, 44 plus 1, 45,465. Forty-five, 465. Plus the unit scrapped. Unit scrapped is 5% of purchases. Now what is purchases? This is purchases. So this is 100. This is 5. So this will be 95. So 5 by 95 into 50,000. 5 by 95 into 50,000. Two six three two. This is going to be 3%. So this will be 97. So 3 by 97 into 45,465. 1406. So 52,632. These are all units, not rupees. 46,871. Done. Same way, I will be doing calculation for gross machine hours. Gross machine hours. Before implementation and after implementation. Initial requirement 6,000 units into 0.6 per hour per unit. So 6,000 into 0.6 will be 3,600 hours. Here it is 5,541 units into reduced to 0.5 per unit. So 2,771 hours. Plus idle time. This is my gross hours. Idle time is 20% of gross hours. This is 80 then. So 20 by 80 into 3,600. 20 by 80 into 3,600. 1/4 of 3,600 is 900. Then this is going to be 12.5% of 100. So this will be 87.5%. So 12.5 divided by 87.5 into 2,771. 396 hours. 36 plus 9 is 45. 4,500 hours. 3,167 hours. Last part, profit and loss statement. Before implementation, after implementation. Shall we start? What I will do is I'll start with normal sales. 5,000 units are sold at 1,000 rupees each. So this will come to 50 lakhs. Plus downgraded sales. At 30% discount, meaning at 700 each. Let us go to the first statement. Downgraded, downgraded, downgraded. Here, look at this. 750 units are downgraded. So 750 units sold at 700. Here 416 units sold at 700. Okay. 750 sold at 700. 416 sold at 700. Chalo, write it down now. Show the working. 750 into 700. That is 5,25,000. 5,25,000. 416 into 700. That is 2,91,200. 2,91,200. Right, total sales or gross sales. ₹55,25,000. 52,91,200. 52,91,200. Less all the costs. Material X cost. How many units are purchased? How many units are purchased? Look at these figures now. You've already got the figures. 52,632 is purchased. After implementation, 46,871 is purchased. What is the purchase price? 40 rupees per unit. Purchase price 40 rupees per unit. So 52,632 into 40, 46,871 into 40. Shall we do it? 52,632 into 40. ₹21,05,280. Here it will be 46,871 into 40. That is 18,74,840. Okay. Inspection and storage cost. Of raw materials, 1 rupee per unit. So 52,632 into 1 rupee will give you 52,632. And 46,871 into 1 will give you 46,871. Machine cost. Machine cost. What they have said about machine cost? Per gross hour, 400 rupees. 400 per gross hour. 400 per gross hour. So 4,500 into 400, 3,167 into 400. So 4,500 into 400 will give me 18 lakhs. $3,167 into 400, 12,66,800. Calibration cost. $2,50,000, and that is going to decrease by 40%. So 1,50,000. Product liability. %3 and 1%. 3% will come to 1,50,000. 1% will come to 50,000. Sundry cost, that is administration cost, 6 lakhs, going to reduce by 10% to 5,40,000. Prevention program costs, 2 lakhs, and this is going to increase to 6 lakhs. So calculate the profit now. Calculate the profit. From the gross sales minus all these expenses. First year before implementation, 3,67,088. 762, 689. Okay. So that is your case study number 1. We'll take a small break for 5 minutes. Then we'll take up case study 2. 5 minutes break. Chalo, shall we start? Case study number 2. Star Sports Company is engaged in the manufacture of cricket bats. Following table shows the budgeted figures for the coming year. Selling price per unit is given, less components, one set, 1200. Assembling cost 2000. Delivery cost is 800. Contribution 800. Components like willow, rubber grip, and handlebar in a set are bought in an assembling process carried out to transform them into a single bat. So these components which we are having here, one set, it is made up of willow, rubber grip, and the handlebar. They are bought in, and an assembling process is carried out to transform them. That means we assemble all of them together and we convert it into a single bat. Market is intensely competitive, where SSC currently holds 30% market share. 30% market share. Annual demand for these bats is 1 lakh units. This is the annual demand. Okay. Not of the company. Annual demand in the market is 1 lakh units. 1 lakh units. So company's demand will be, company's sales will be 30% of the market share, 30% of 1 lakh. So that will come to 30,000 units. Okay. So company is going to have only 30% market share, that is 30,000 bats. On reviewing the previous performance, it is revealed that 3% of the bats supplied to the customers were returned for free replacement because of faults. Defective components which were initially brought into the assembly process. Which components? These components. Okay, which were initially brought into the assembly process are held responsible for this. These returned bats cannot be repaired and have no scrap value. Supply of faulty bats to the customers could be eliminated by implementing an inspection process immediately before the goods are delivered. Inspection process immediately before the goods are delivered, after they are manufactured, but before they are delivered. This would improve customer perception, thus resulting in an increase of 5% in the current market share, taking the total share to 35%. So now we are having 30%. So it will increase to 35%. Required. Calculate the quality non-conformance cost. So what is this question all about? Cost of quality. This question is based on cost of quality. Non-conformance cost. For the coming year based on the budgeted figures and the sales returns rate. Calculate the impact on profitability. Impact on profitability due to implementation of the inspection process for the bats. Okay, looks pretty simple, but may not be. Let us see. Case 2. Write down. Total annual demand, annual market demand is 1 lakh bats. Company's market share. Company's market share. 30% of 1 lakh. 30,000 bags. Like in the previous problem, 30,000 bags are sold, but you normally get a 3% return. So how much is production? Right on. If now, if 30,000 bags are sold to customers, after they have found 3% defective bags, then bags to be produced and supplied equal to, how do I calculate? 30,000 divided by 97%. 3% is return, na? So divided by 97%. So how many we have supplied actually? 30,928 bags, out of which 928 bags have been returned. That is 928 bags are returned. Now, 928 bags are returned. Let us see what is happening to those 928 bags. After returning, they are saying that 928 bags are returned and this cannot be repaired and they have got no scrap value. So whatever is the cost incurred on these 928 bags, what is the cost incurred? 1200, 2000 plus 800. Okay, this total cost is going to be waste. This total cost is going to be waste. So if 928 bags are returned and they are to be replaced free of cost, then the cost of those 928 bags which you are going to replace, we have to find out. Okay, which is made up of these three costs. So let us write down. Therefore, if 928 bags are to be replaced free of cost, then the cost of 928 bags will be equal to 928 into, you can show in bracket, 1200 plus 2000 plus 800. That is 3000 into 928, 37 lakh 12,000. 37 lakh 12,000. Okay. Now look at the question. Now look at the question. What is the question asking? Supply of bags. This part is important. Supply of faulty bags to the customers can be eliminated by implementing inspection process immediately before the goods are delivered. And if that happens, the market share would be 35%. Let us look at this one. What will happen if I implement this one? By implementing an inspection process before the goods are delivered? It means that customers are not going to get defective bags. Customers are not going to get defective bags. I'm not saying that I am not going to manufacture defective bags or my production will not have defective bags. Production will have the defect continued because the defect is coming on account of what? The components which are bought. It is not my fault. See here, defective components are held responsible for defective bags. And I am not manufacturing those components. Those components are being manufactured by somebody else and assembling them and putting it into the form of a bag. So I cannot have control over that. So that means there will be some defectives. Correct? So defectives will be there. But what is going to happen is customers will get only good bags. They will not get defective bags because after production, before I send it to customers, I do the inspection. And I find that, okay, these bags are defective. I don't send them and I send only the good bags. So customer perception increases, goodwill increases. Customers are more satisfied. They are more confident now. More customers will buy. 5% increase in sales. So I will now be able to sell 35,000 bags. But till then, it means that since I did not implement this, inspection cost, I was having an opportunity cost. I'm having an opportunity cost. What is that opportunity cost? Loss of contribution. Loss of contribution. I'm having that now. You got my point? Because I'm not having an inspection process, I'm having an opportunity cost in the form of contribution lost. Contribution lost on what? Contribution lost on those extra 5% bags. Extra 5,000 bags. And what is the contribution? Contribution is 800 per bag. Contribution is 800 per bag. So 5,000 into 800, 5 is 40, 40 lakhs is a loss of contribution as of now. As of now, because I have not implemented that. There is a loss of contribution. Okay. Now, once I get that, that means once I do this inspection process, what will happen? At loss of contribution, I will now get that contribution. That means there will be no loss of contribution. So savings in opportunity cost. So I am going to earn additional contribution of 40 lakhs. But there will be a problem. There will be a problem. What is that problem? Additional 5,000 bags I have to sell. But again, that 5,000 bags will be after replacement of 3% of the defectives. So how much I'm going to produce actually and how much loss I'm going to suffer. So what I will say now, 5,000 additional bags that I'm going to sell, 5,000 additional bags that I'm going to sell. That is equal to 97% because 3% is going to be returned back. Okay. So into 3%, that is going to be returned back. That is going to be 155 bags are going to be returned back. So I will be producing 5,155 bags. so that I can sell net 5,000 at 155 bags. Cost is going to be lost. Now, Satvika, I want you to tell me what is going to be the loss on those 155 bags which are defective. Can you tell me what is going to be the loss on the 155 bags which is going to be defective?
Uh, 155 into contribution per bat, 800. 1,24,000.
By contribution, entire cost is lost now. Just like we calculated in the previous case, 928 bags were lost. So the cost, entire cost of manufacturing those 928 bags are lost. So what is the cost of these 155 bags?
Six lakh 20,000.
6,30,000. Now tell me, how did you get 6,30,000?
I have added all the cost like 1,200 plus 2,000 plus 800 into 154.
So you have taken 3,000 into 155. Am I right?
4,000 into 150.
2,000 into 155. Yes, Swastik, tell me, what is the cost of 155 bags found to be defective?
Sir, I have got 6,20,000 because all the cost. Sorry, excluding that 2,000 rupees we have to add, sir, like 2,000 into 155.
So how much are you
3
getting?
lakh 10,000. 3 lakh 10,000.
Okay. Now pay attention. When I calculated the cost of 928 bags, very important point. When I calculated the cost of 928 bags, I said 928 into, I showed you the specific calculation in bracket, 1,000, 1,200 plus 2,000 plus 800. Now I'm going to calculate cost of 155 bags, but I will take into consideration, which figures 1,200 and 2,000 only. I will not take delivery cost because I'm not delivering those bags. I'm not delivering those 155 bags, isn't it? I'm stopping it before they are delivered. I'm detecting the defectives before they are delivered. Yes or no? Are you understanding what I'm saying?
Yes, sir.
800 rupees is the delivery cost. I'm not delivering the bags because I'm finding the defectives before they are delivered. So they are not delivered only. They are manufactured. Yes, they are manufactured. They are defectives. I have to remanufacture. But I don't need to deliver those defective bags and return those defective bags. There will be no delivery and return. So that cost is going to be saved. So that means only 3,200 into 155. 3,200 into 155 will be taken as a cost variable. Akhilesh, are you able to understand?
Yes, sir.
Satvika, have you understood calculation? Why 800 is not taken? Have you understood? Okay. So now contribution, additional contribution earned on those 5,000 bags at the rate of 800 per bag is 40 lakhs minus 155 into 3,200. This comes to 4,96,000. This is the cost of defective bags. Net figure is my profit. Okay, so let us do this. So 928 bags, you have got the cost here. Below that, if inspection process is initiated, if inspection process is initiated, then initiated before delivery, right? Before delivery of bags, then market share increases. Market share increases to 35%. That is 35,000 bags. Therefore, there is additional contribution. There is additional contribution of 35,000, 5,000 into 800 equal to 40 lakhs. Now, to supply 5,000 bags, net of 3% defectives, the actual production should be 5,000 divided by 97%. That is 5,155. Cost of 155 defective bags. Defective bags is equal to 155 into, show in the bracket, 1200 plus 2001. That is 4,96,000. Net benefit is equal to 40 lakhs minus 4,96,000 equal to 35,04,000. Therefore, total quality non-conformance cost, that is what we are asking, non-conformance cost, will be what? This 37,12,000, which is the cost of 928 bags, plus 30,000 of 928 bags, and this 155. So 37,12,000 plus 35,04,000 is equal to 72,16,000. 72,16,000. Second part of the question, what is the impact on profitability? Impact on profitability is that there will be a net benefit of 35,04,000 plus there will be savings in delivery cost of that 800 which we have not taken here. Savings in delivery cost. So write down impact on profitability. impact on profitability. Additional contribution, or you can say additional net contribution, 35 lakh 4,000 plus savings in cost, savings in delivery cost. Which one? Not this one. This one we have already considered. In that 35 lakh 4,000 we already considered. Savings in delivery cost of 928 units, the initial 928 units. So 928 into 800. 7,42,400. 42,46,400. This will be the increase in profit. Increase in profit. So had we done this earlier also, when we are manufacturing those 30,000 units, had we done this, then again there would be no delivery cost. The delivery cost would have been saved of 800 rupees. Okay. So the profit would have increased. If we had done this earlier only, the profit would have increased by 42,46,400. Here. So we'll stop here for today. Wednesday and Thursday, there is no lecture. Wednesday and Thursday, no lecture. Friday, the lecture will be at 7 o'clock. Morning, 7 o'clock. Okay. Have a nice day.